What gives the US dollar its true power? Is it just the paper and ink, or is there something deeper at play, something that most people never even think about? It's not just government promises or military might that make the dollar so dominant. The real secret lies in oil, the lifeblood of the modern world, fueling everything from cars to factories and connecting economies across continents. For decades, nearly every barrel of oil sold on the global market has been priced and paid for in US dollars. This unique arrangement has created relentless, almost automatic, global demand for American currency, making it the backbone of international trade. This petrodollar system has quietly shaped everything from the price you pay at the pump to the stability of entire nations. It's a system that operates behind the scenes, yet its influence is everywhere. But now, that system is facing unprecedented challenges. New economic powers are rising, old alliances are shifting, and more countries are starting to question whether their economic futures should be tied so closely to the dollar. The world's silent agreement is being tested, not by war or conflict, but by the changing nature of global trade and shifting economic priorities. Imagine if this invisible engine suddenly stopped running. How would our daily lives change? Would prices soar, jobs vanish, or would new opportunities emerge from the chaos? The petrodollar's future is more uncertain than ever, and its unraveling could trigger a chain reaction that reshapes the world as we know it, economically, politically, and even socially. The question isn't if change is coming, but how soon and how prepared we are to face it. Are we ready for a world where the dollar is no longer king, and what will it mean for all of us when that day arrives? To truly understand today's global financial crisis, we need to rewind the clock to 1971, a year that quietly changed the world forever. That year, President Nixon made a historic announcement. The United States would end the dollar's direct link to gold. For decades, every dollar could be exchanged for a fixed amount of gold, anchoring the world's currencies. But overnight, that certainty vanished. The dollar was now backed by nothing but faith in the US government and economy, plunging the world into a new era of financial uncertainty. Just 2 years later, the 1973 oil embargo struck. Oil prices skyrocketed, sending shockwaves through economies everywhere. Long lines at gas stations and soaring energy costs made it clear the world was deeply dependent on Middle Eastern oil. In response, U.S. officials moved quickly, forging a secret agreement with Saudi Arabia. The deal was simple but powerful. Saudi oil would be priced exclusively in U.S. dollars, and the Saudis would reinvest their oil profits in U.S. debt. In return, America promised military protection and support. Soon, all OPEC nations followed suit. This new system restored global demand for the dollar, making it the world's reserve currency once again. The dollar was no longer backed by gold, but by oil, ushering in the era of the petrodollar. This arrangement became the backbone of American economic power, fueling decades of prosperity and influence. But beneath the surface, questions lingered. Was this new system, built on mutual interests and fragile alliances, truly stable, or was it just a temporary fix? The petrodollar's foundation was set, not by accident, but by careful design. Its consequences would ripple across the globe for generations. Today, that foundation is beginning to show cracks, raising urgent questions about the future of the world economy. The petrodollar system is a global money loop. Countries buy dollars to purchase oil, driving up demand for U.S. currency. Oil exporters, flush with dollars, invest back into U.S. Treasury bonds. This cycle lets America borrow cheaply and spend freely, financing everything from social programs to military might. The world gets a stable reserve currency. The U.S. gets to live beyond its means. But this system also exports inflation and creates deep dependencies. When participants question the deal, the entire cycle is at risk. The petrodollar is the operating system of globalization. But every system has vulnerabilities. What happens when the world wants out? The U.S. has been the biggest winner, enjoying cheap imports, easy borrowing, and global influence. Oil-rich nations gained wealth and security, transforming their economies. but developing countries, lacking oil or strong currencies, struggle to buy expensive dollar-priced oil, trapping them in debt. Even American workers pay a price. A strong dollar hurts exports and manufacturing jobs. The benefits of the petrodollar aren't shared equally. Structural imbalances have grown, both globally and within the U.S. Is this system still serving anyone's best interests? For decades, the petrodollar seemed untouchable. Now the BRICS alliance, Brazil, Russia, India, China, and others are challenging the dollar's dominance. Sanctions and asset freezes have shown that dollar reserves aren't truly sovereign. China and Russia are trading oil in their own currencies. Saudi Arabia is considering selling oil in yuan. New payment systems and financial institutions are emerging to bypass the dollar. Each deal outside the dollar chips away at its foundation. The world is moving toward a multipolar financial order. The question isn't if the petrodollar will be challenged, but how quickly the change will come. The cracks are spreading. What if oil was no longer traded in dollars? Imagine a world where the global oil market, once dominated by the US dollar, suddenly shifts to other currencies. This single change would send shockwaves through the global financial system, altering the balance of economic power. The dollar's value would drop as global demand fades. Countries would no longer need to hold vast reserves of dollars, reducing its status as the world's primary reserve currency. Foreign central banks would sell off their dollar reserves, flooding markets and weakening the currency. This could trigger volatility in global markets as investors scramble to adjust. Americans would face soaring prices for imports and rising inflation. Everyday goods, from electronics to gasoline, would become more expensive as the dollar loses purchasing power. The government would struggle to finance deficits, forced to raise interest rates or cut spending. Borrowing would become more costly, putting pressure on public programs and investments. The era of easy money would end, and America would have to live within its means. Households and businesses alike would need to adapt to a new economic reality. U.S. global influence would shrink, and economic power would rebalance worldwide. Emerging economies could gain more say in global affairs, shifting alliances and priorities. The transition would be turbulent, but not catastrophic. While the adjustment would be painful, it could also open the door to a more multipolar and resilient global economy. The end of the petrodollar era would mark the close of a geopolitical age. It would be a turning point, echoing past moments of dramatic change in world history. Is this painful adjustment overdue, or is the world simply evolving toward a new economic order? The petrodollar system shaped our world, but its time may be ending. This isn't just American decline, it's a return to a more balanced, multipolar world. The privileges of the dollar came with hidden costs and growing instability. Now we face a future where economic power is more evenly shared. The transition will be challenging, but it's not the end, just the end of an era. As the old system unravels, we must ask, what comes next? The decisions made today will echo for generations. What will we build in place of the invisible engine that powered our world?